Okay, welcome everyone again to another episode of Junior Resource Investing. This podcast is dedicated to deepening your understanding of the junior resource sector and some important and exciting plays within it. I am your host, Matthew. Just as a disclaimer, please remember that this is not financial advice. Neither myself nor my guests are financial advisors. This podcast is for entertainment purposes only. For full disclaimer, please check the YouTube notes below. And also another reminder that there is always a companion analyst report written for my interviews, and a link to that report can be found in the YouTube description. Without further ado, though, I'm pleased to present our latest guest, Paul Cowley, CEO of Phenom Resources. Phenom is a vanadium... Hi, Paul.
Hey, Matthew.
Phenom is a vanadium and gold explorer operating in Nevada. It trades on the TSXV under the ticker PHNM, and on the OTCQX in the States under the ticker PHNMF, and in Europe under 1PY0. Anyway, Paul, welcome. Thanks for coming on the show. How are you doing today?
Excellent, Matthew. How are you?
Good, yeah, doing fine. Thank you.
Glad to be here.
So I guess, thank you. I'm glad you are. Let's just jump right into it, right? So, why don't you just start us off with a little 30-second elevator pitch on Phenom Resources. What is it? Why is it compelling? And why should investors care about your story?
Sure. Yeah, so Phenom is run by an amazing group of technical people. We've literally got 450 years of industry experience in our group. We're professional engineers and geologists, Canadian and American, men and women. We know what we're doing because we've been all working at our careers and our specialty, right from exploration and discovery to building and operating mines, through our careers, working for major mining companies. And now we're together in a great group. Phenom is working in the Tier 1 jurisdiction of Nevada, but not only just Nevada, but in the most favorable, prospective, and desirable gold trend, the Carlin Gold Trend, on the planet, the most desirable on the planet. And we've got a very unique geological and asset base on the Carlin Trend. It's a stacked system, geological system, where you have a vanadium resource, and it's North America's largest, highest grade vanadium resource at surface. And below that is a Carlin type gold system that we're working on. So we've got a very unique situation. We've got basically two paths to success here with vanadium and gold. Gold being, everyone understands gold, vanadium being mineral of a choice for large energy storage batteries through redox flow batteries. And we have lots of activity going on, lots of news flow, lots of triggers through 2022.
Perfect. Thank you, Paul. I guess, like you kind of referenced, everybody knows gold, but probably fewer people, including myself prior to getting to know the story, frankly, are familiar with vanadium. So do you mind just doing a brief run through on vanadium, historical uses, production, future use projections, and then you mentioned those redox flow batteries. So do you mind just kind of giving us a quick primer on vanadium?
Sure. Yeah. So vanadium has been traditionally used as an alloy for strengthening steel. 2 pounds of vanadium in a ton of steel will double its strength, and it also lightens it. So it's a really unique infrastructural steel, alloy for strengthening steel. And 75% of that vanadium is around the world is produced from China and Russia. So this is a really geopolitically favorable project because it's in the U.S. The U.S. doesn't produce it. As I say, it's traditionally been an alloy for strengthening steel, but we know now, and it's been several decades, that the redox flow battery is a vanadium battery that's just as good, if not better, than the lithium battery. And in particular, in its use in large energy storage battery situations like solar, wind, backup power, microgrids, and the like. So it's actually superior in many ways to the lithium battery. So we're actually on the start of a new wave of a shift of vanadium going into these as a green energy source because of the green energy push, the sustainable green energy movement that we're in. The U.S. government is predicting that these large energy storage batteries will be growing astronomically here in this decade alone and going on further. I can talk a little bit more about it, but this is a lengthy topic, and I love talking about it because there's really some great appeal to the vanadium battery. It like lithium. A couple of the really important things is it's safe, whereas the lithium battery runs hot and it can actually explode and have a thermal runaway, and it's very dangerous. The other thing too is with vanadium is it's recyclable or reusable. You don't it doesn't, with the multiple charges and discharges, lithium battery will degrade. The vanadium battery won't. So it actually has a life expectancy of well over 25 years. It's reusable, so there's no disposal of the metal. Like the lithium will be, you have to change out these batteries every 3 to 5 years. With the lithium, vanadium, you just keep on using it. So there's some really amazing features for the vanadium redox flow battery.
And vanadium, it's been added to the critical minerals list for both Canada and the United States. Is that correct?
That's correct. Yeah.
Yeah. So critical to future as we understand it of the green revolution. Absolutely. Well, why don't you, if we can just transition here, why don't you just tell us a bit of like your background? What where did you cut your teeth, and what experiences do you bring to the table for Phenom?
Yeah, so I'm an exploration geologist, and I've been in the business for 42 years and worked all over the world, principally North and South America, but also with West Africa. I was the first, about half of my career was with BHP Minerals, which is one of the largest mining companies in the world. And I was involved with managing a project for BHP up in the Canadian Arctic that we were able to discover and evaluate 4 gold deposits, amounting to about 8 million ounces of gold. And then I moved into the junior sector, and I've worked in many jurisdictions, many different commodities, gold, copper, vanadium, coal, diamonds. So I've been well versed, very adaptable. And so, lots of good experience. And with that experience, it really comes down to being able to be very selective in what you spend your time at, and making good decisions. I would say one of the main things that I bring to the table, besides all of that background, is the ability to look forward at something that has the economic viability for it. There's no point in spending time and money working. I don't want to spend any time and money working on projects that are like a pump and a dump or something that has no likelihood of economic viability. So that's a very fundamental thing when I move a project, when I pick up a project, when I move it forward and keep working on it. It's got to have that element to it. A lot of geologists don't consider that. They're just looking for a splashy something or other, but it's got to have legs. It's got to be able to go all the way to production.
Mm-hmm. Well, and I'm going to crib a quote. I think it's from Walter Gretzky, right? You skate not where the puck is, but where the puck is going. And I kind of get the sense that this is Phenom with vanadium, right? That maybe it's a small sector now, but if like you say, you give it a few years, and this decade it's going to be growing exponentially, right?
Yeah.
So, and I think that we've made. Precisely, yeah. Do you mind? Maybe we've already kind of covered it, but I mean, can you just tell us the genesis of how you arrived with Phenom? What's the story there?
Well, it's over a course of 42 years that you tend to end up working with a number of people, overlapping new different groups, and so it's a combination of just sort of an evolution of connecting with people and getting into the right group of people in the right jurisdiction. So it's sort of an evolution. I've always, obviously, I'm a professional geologist, so my word and reputation is very important. And so I always seek people of similar character. And it's that sort of just sort of funneled this way.
And so when did you become CEO of Phenom?
It'd be about 12 years ago. But it wasn't until 2017 that we really got on to the Vanadium Project. This is where it was actually, what's interesting is it's a project that was worked on in the mid-'60s by Union Carbide, which was a very, very successful mining and chemical company in the U.S., which unfortunately went bankrupt when it had their disaster in India. But they were very, very good explorers. They found this vanadium deposit. They moved it forward up to a point, and then they realized that they just didn't have the metallurgical know-how at that time to unlock the value. And so it was dropped. They saw they just couldn't move it forward. They could only recover about less than 50% of the vanadium out of the rock. But fast forward our situation, we've got 5 metallurgists in our group. We found the secret. We broke the code on this, and now we can get over 80% recovery of the vanadium. So it's a combination of smart guys that are that are working on the project, know the value there, persistence, and obviously unlocking the value, advancing it in a very smart, orderly fashion on exploration and getting a resource, and then working on the metallurgy, then taking it to that's the first economic study.
Mm. Yeah, it's any team. It's never just one person, right? There's always strong team members, right? So I guess, and not at all. This is not at all meant to a slight to those of your team that I will remain unnamed. But I mean, Dave Matheson is definitely a get when it comes to Nevada Gold, right? Do you mind just kind of introducing him to our listeners who might not know who he is?
Yeah, Dave Matheson is a legend. He's worked in Nevada in the Carlin Trend for decades, and a senior guy, loves the hunt for gold and new deposits. He's a mine finder, a deposit finder. He's found well over 6 deposits that he's credited with, and with the team in Nevada, in Newmont, which he worked on for a number of years, on critical teams that ended up finding and expanding resources. He was evolutionary, really, in the thinking of Carlin over the last 3 decades. So, I mean, probably one of the top 5 in the world that know the types of deposits, and as I say, 6 deposits within 10 kilometers of our property. So knows the rocks, knows the systems, knows what to look for. And that's so important. He's told me before, if you don't have the right people working in Nevada, chances are it's not going to work for them. He said 95% of the geologists that come in Nevada think they can import their thinking, their exploration approach, and most of the time it just doesn't work out. Nevada it can be very tricky, but you got to have the right people that know how to do it. And Dave's obviously proven it time and time again from finding these deposits.
And he's obviously.
And the other thing is chemistry. And that's one of the things that we have, not only me and Dave, but also me and our whole team. Chemistry is very, very important when you get a team together. Dave and I are similar minded, and we get along super well. We have very, very similar values and approach to exploration. Know when to spend and when not to spend, when to take time, how to go deep diving into things. Yeah, so he's a real blessing, and I love working with the guy.
Awesome. And he is obviously, I mean, you and I have chatted before, and this comes up, but he's obviously quite excited about the prospectivity of your Carlin Gold Vanadium Project and Smoke, right?
My apologies. Sorry about that.
No, it's quite all right. Yeah, and he's quite bullish as it were, on your Carlin Gold Vanadium, correct?
Yeah. Well, both our Carlin Vanadium, the gold system, he's the one that's leading the charge and reviewing, spotting the holes, looking at the holes, interpreting the geology for the Carlin system, which is it's a very, very large and interesting system, as well as in smoke. This is something that actually just last week we announced tapping into this new hydrothermal system that looks really, really interesting. And we're actually starting to drill again in smoke tomorrow.
Interesting. Well, and you like you mentioned off the start, you have a lot of irons in the fire, right? I mean, you're kind of, I get a kick out of it. That drill's getting a lot of kilometers on it. You're bouncing back and forth from Smoke to Carlin, right? So and you're doing that quite strategically, which I appreciate. So you actively drilling on Smoke. Do you mind just kind of running over at this moment? May as well take this as an opportunity. Do you mind just running us through Smoke? I mean, how many holes have you drilled into it so far? How many do you anticipate? You say you're drilling again tomorrow. How deep are you going? Just basic overview.
Yeah, so I should mention that Smoke is a gold prospect for us. It's only about 2 hours drive from our main flagship property, so it's well located for us to operate. We've done two passes of drilling at Smoke, so we've done a total of 13 holes. These are all shallow holes, 600-foot holes, and it's really a very unique situation. Again, there's a big outcrop of quartz ridge, highly altered dolomite, and it's half a kilometer long and 200 meters wide, standing up in gravel in basically covered valley. So there's very little to go on, and so Dave really liked the look of this ridge from a number of reasons, for the Pathfinders and the gold and the lithologies and whatnot. So we started with the first pass, realized that we got the right kinds of rocks, and then did some geophysics to get a bigger picture of it. Got favorable anomalies on that. We did a drill program at the end of June. So this would be a whole 9 through 13, and got the one zinger of a hole. It didn't have so much gold in it, but it had like an extraordinary amount of alteration, veining. oxide, and it's just below 150 feet of gravel. So it's a blind target, and we don't know how big this thing is, but it's juicy as heck. We've got quartz and alunite veining, which are very, very good to have. Dolomite alteration, tons of brecciation and veining, good, and it's all oxidized and multiple types of oxide minerals. Which Dave, when he saw it, he was basically vibrating. This is we're on to something here. So so obviously we're on the edge because we didn't get significant gold in it, but we got pathfinders like arsenic and antimony in it. So we're now just working our way into this area where we think the system is developing. So again, shallow drill holes, we do a hole a day. So, we'll be at it for a week, and then we'll take a break from that, have our assays in the lab, get that turnaround in 2 weeks, move the rig back to Carlin, and we've got a choice of either doing some more vanadium drilling, because that's another thing that we're doing this summer, is we're expanding the resource, because we have a resource that from our drilling from 2018, we knew we could be bigger, but we figured we had enough tonnage at that point. This was an opportunity for us to push the edges out. So we've done about 45 holes on the vanadium side too. So and we've got another 13 to do. Those are again 2 or 3 holes a day, real fast and efficient, cost effective, crazy. As well as another follow-up hole on our hole 15, which would be a gold follow-up. Hole 15 was a very good hole at Carlin. It was the best that we've ever come across. It has the most alteration, the most quartz and brecciation, veining, sulfides, really strong Pathfinder metals in mercury and arsenic, and gold from top to bottom. Just low-grade gold, but it's different in that there's more gold throughout the whole section versus 500 meters. It's over 780 meters of gold saturation. So we've got some really, really interesting things on the gold and the vanadium side on on these projects. So that's the idea. Is as you say, bouncing around. It's not really from a standpoint of lack of focus. It's a matter of managing, keeping the drill working for your benefit, moving to one project, taking a round of drilling, and moving off, waiting for assays for that before you can come back and make, further drilling. That's just the prudent thing to do, because holes can look fantastic, but they may not have the numbers that you think it have, and so you got to rethink. Every hole tells you something new, and you got to use that. But you got to be smart about it too, and not blow your budget on going on some bad assumptions, basically.
Yeah, no, thank you. And I will say that you strike me as a fairly efficient and lean man when it comes to the finances. That's, it's all about trust as an investor, right? You need to trust the person that you're investing your money in, and will you make the best decisions with my money? And on that matter, yeah, I will. I will commend you. Yeah, you seem like a fairly. Don't want to say flinty, but you know what I mean, right? Yeah, very, very shrewd.
Yeah, I've been mentioned. People have said that too. Yeah.
I just want. This is curious. Just to step back for one moment here before we move on to your Carlin Gold Vanadium, but smoke, is it just because it was undercover? Is that, that's the future of mining, right? Is all these more difficult deposits, but is that the only reason why it had yet to be explored?
Right.
Yeah. Okay. So why don't you, can you run through, so, just, as a visual for people or to help explain it, it's about 100 feet deep for your vanadium, right? Is that how deep your deposit is? Or?
It goes to about 80 meters.
Meters, pardon me.
200 foot holes, yeah.
Okay.
That's right.
And then about 6...
Yeah, so that's to describe it, it's long and about 2 kilometers long. This deposit, this vanadium deposit, 2 kilometers long. About well, we're pushing the edges out, so it's probably 800 meters wide, and then it's usually just one, but sometimes there's multiple zones that are kind of on the average 15 to 20 meters thick, bands, kind of layered geology, so to speak.
Okay. And yeah, you have this vanadium at surface, and it's a large deposit. The plan is
High grade.
And high grade. Yep. So plan is open pit that, and then if the geology gods, knock on wood, right, are happy enough to bless you with a gold deposit, then that would be the underground mine. So you actually end up having 2 different mining operations on the same footprint, which
and physically that's quite unique in that respect. And physically, you could separate the 2 out from physical separation. The vanadium is in the top 80 meters. The gold is somewhere down in 300, 400 meters down. So from a safety standpoint, you could actually operate 2 different companies could operate that simultaneously. One is an open pit, one's an underground. So that's one of the possible strategies, is if we were to make a gold discovery and define a gold deposit, that's something that we could sell to a significant partner or party, and that money. And these are types of deposits. These are we're in the Carlin Trend, so this is where monster deposits occur. And they're usually, we're going after the high grade feeders to these systems. That's what Dave's targeting. So these are sort of half ounce type of deposits, and they're multi-million ounce deposits. So these are, very, very profitable kinds of targets and mines. And so the idea, we could potentially sell, discover and develop a resource and sell that. Obviously, we wouldn't sell it cheaply. We'd sell that at a good price. And that money would give us the money to finance the vanadium mine. So there's some really, really interesting ways of 2 paths forward and different ways of succeeding here.
Mm-hmm. And that's, I obviously agree. I think that, that there are a couple of options that we'll get into here in a moment here, where if either of these options come to fruition, the gold or the grants, then this creates an extremely compelling case for your vanadium deposit, right? That's that huge boon economically in terms of helping making the numbers work. Do you mind though? So let's just set aside, just for the sake of discussion, set aside the gold prospectivity for a moment, and can you just run us through just the tonnage, the percentage, the concentrate of your vanadium though? What's your vanadium deposit look like?
In terms of size, in terms of a resource, 80% of it's in the indicated, which is very favorable. We've got 380 million pounds of V2O5, or vanadium pentoxide. So that's a significant amount, and the grade is 0.65 V2O5. So we're kind of sitting in this high grade. There are deposits around the world that are higher grade. They're in the 1 or 0.8 to 1.2. And they're obviously in operation in South Africa and Brazil. But we're sitting in the next kind of tier of grade. There's a lot of vanadium deposits out there that are like 0.25, 0.3. Hard to say eventually, I think, because I really think that there's a future for vanadium in the green energy space. Eventually, those will become economic, but we're going to need to see $15 or $20 per pound vanadium prices for that to happen. So we're sitting in a really nice. There's a nice place. There's probably 8 projects around the world that are kind of in the economic study stage, so they could move towards production, obviously depending on financing and metal prices. So we're well positioned in a timeline of permitting and the likes.
Yeah, and I find that interesting because, correct me if I'm wrong, but is it 80% or 70% of global vanadium is not even primary or even secondary mining? It's from slag, correct? It's a byproduct from slag. And so, if we start to hit this inflection point where demand for vanadium starts to increase exponentially, or starts to increase in a meaningful way that outstrips, steel growth, then all of a sudden these primary vanadium mines, such as your own, is where it's game on at that point, right? I guess if we might just kind of circle back, or I guess let's just chat about NPV for a while here for a second, because vanadium is so volatile, right? I mean, I'll try to put a graph up for my viewers on YouTube, but I mean, it peaked out almost at $30 per ton a few years back, US. Now it's down. Is it $8 or $9 now, right? So there's huge volatility, which obviously, as an investor, it makes me wary because it's hard to put a pin on anything or make real projections. And then also, obviously, from a mine building perspective, it also makes it really difficult. I mean, copper, right, has come down. There's a copper mine I follow that they just had to shut down operations for 6 to 9 months because copper prices are low, right? So even Dr. Copper, you get that issue. I guess for me, like, where do you see, and how does this market, or how does vanadium start to stabilize? How does it strengthen in demand where you have that elevated price, and then also stabilize the volatility so it makes it more predictably investable, if that makes sense?
Yeah, that's a really, really important thing to identify, and you have to really look at as I started mentioning in the earlier part, that vanadium has traditionally been a steel alloy. So it's in one way it's kind of a victim of whatever's happening with steel and infrastructural projects around the world. And when there's been cycles where there's a perception of a shortage, like a push for a lot of steel or a technological advancement or something like that, you get these spikes in vanadium. So in 2005, 2008, 2018, they're really spiky. And then it comes down to like $5 or $6 a pound. The most important thing to understand is that's a thing of, we're on the edge of that being past tense. We're still in that short transition. As I say, the green energy space is going to be the game changer for vanadium, because it will decouple from that demand on steel, or reliance on steel, and become the metal of choice for large energy storage batteries. And the U.S. expects to be the world's largest market for these stationary batteries. So the supply and demand of vanadium is going to be completely changed here in the short order, in sort of like the 6 month, year, 2 year range. And this is what's going to change that spikiness. It's going to become more more reliant on kind of more typical of other types of metals because of that bigger market. And just like lithium, we've seen lithium prices. Last September they went up 5 times because of the perceived demand for lithium in EV space, and it hasn't come back down again. It's stuck up there. So we see that happening with vanadium falling in line with that type of demand, global demand, the need for the battery chain that also good to note that the lithium battery is great for the EV space. The vanadium battery is better for the stationary battery space. So they both have really good niches. There'll be cross pollination between the markets where vanadium could come into the EV space at some point, but there's enough demand in the EV space for lithium to just do nothing but provide to the EV space and not have any left over for the large energy storage battery, where the vanadium will be the other way around. So this is where there's I think a very significant shift that's going to be happening here in the short order.
Well, and like you said, I think it is important just to clarify, right, that when we talk about, fields of solar panels or fields of windmills, or even just, there's the Tesla's home battery that they've been toying with the last few years. So that's the use case for your redox flow battery, right? So especially as we start to green infrastructure, this becomes a more and more real, serious issue that needs to be solved, is the long-term storage of electricity, right? So, so I guess just to further this point, because right now we talk about that right now it's all steel usage, right? For aerospace and for rebar and such. But what percentage of vanadium right now is used for redox flow batteries?
I think it's around somewhere between 5 and 10%.
Okay, right. So a very small.
So we're going to see a big shift here. I would think that in the next 2 to 3 years, it's going to be more like 40%.
Yeah, well, and that
30, 40%.
That fits within, just based on my reading or research for this interview, is I saw a projection from a reputable analyst where he figures that the global vanadium redox flow battery market is going to triple by 2026, right? So I mean that's a huge annual growth rate, and this is where.
Yeah, and I can add to that. There's huge amounts of U.S. federal money that's available. This is the grant you mentioned, reference to a grant money, and that's where this is. Carry on with that thought is there's $9 billion that have been earmarked in Biden's infrastructure bill to invest in projects, companies and projects that are in the battery chain space. They want to ensure, and there's from a geopolitical, homeland security, and economic viability of making sure that the U.S. is at a forefront. Right now, it's behind China in terms of where it should be with batteries, and they recognize it, and so they're putting bucks towards it. We made 4 applications for grants, U.S. federal grant money, through the Department of Energy and Department of Defense in June, and these are big allotments, and we're looking to. We think we have a really good justifiable story for them to not focus only on lithium. And you got to diversify your supply line, and lithium, is not the be all and end all. And so, yeah, we think that we have a pretty good chance of getting some grant money, and we're talking big bucks. These applications are for, one application is for $100 million. So if you get something like that, obviously goes to the bottom line of your Capex for funding your project, and obviously a federal government supported project would be astronomical for a company like ourselves.
Well, and let's talk about that for a second, but just as a segue, right, that you have this vanadium deposit. There's $4 billion worth of vanadium, give or take $1 billion, right, in the ground for you right now. And at current vanadium prices, marginally economic. I think that there's a very legitimate bull case to be had that, as we just mentioned, that vanadium itself, I mean, there's going to have to be a way for the market to incentivize extraction, because the supply is not going to keep up with demand. So if you're actually a patient investor and willing to actually invest and wait a number of years, I think this is a beautiful opportunity, because you have $4 billion trading for $40 million market cap, give or take, right? But then, yeah, you have this potential gold deposit that would just between the gold and the grant, if one or heck both of those come through, this is an extremely explosively powerful story, right? Because vanadium is a critical mineral, because we're seeing the kind of the shrinking of the fraying of globalization, as you mentioned, right? That, I mean, now it is this return to resource nationalism. If you have a vanadium deposit like America does in a mining friendly jurisdiction, that's large and economic and has this potential to solve their issues, it starts to sound like I try to be objective. I don't, but I mean, I get excited. This is an exciting project, right? So I understand.
Yeah, it is.
So yeah, I mean, is there anything else about the grants that we should mention? You said that you've applied for how many grants now in the last couple of weeks? Four grants.
Four grants. Yeah, and the what we're being told is the fall. Potentially October, November, it could be a decision made. Of course, there's going to be great competition for free money, and this is not loan money. This would be free money that the government would want to invest in projects, and they recognize that it takes research and development money. This would be that's investing in these companies, because you got to be looking at a 5-year game plan. Otherwise, you're just way too far behind on the curve. So I think that's by the fall we'll get an idea of where we sit against the competitors.
So let's just talk worst case scenario, right? Let's say that the grants government changes its mind. They actually don't like critical minerals, right? Gold's not there, right? Worst case scenario. So you're stuck with trying to make your current vanadium deposit the best it can be. Are there so right now, if correct me if my numbers are wrong, but I think it's as of your PEA from 2020, it's $535 million in Capex, initial Capex. So do you have plans to reduce that number? Is there a way for you to maybe get that number down to help make it more economically viable?
Yeah, there's a number of opportunities that were identified in the PEA and the preliminary economic assessment. We've done one already, and we can see we can save money. And we're in the process of doing another internal study to change some of the equipment that was being used. And so there's a number of opportunities to bring it down. And the other from the other end, increase the size of the resource. And then there's always with these kinds of projects, there's smart engineers that can look at maybe staging something. Like we've got one type, we've got an oxidized portion of the deposit and an unoxidized portion, and one is cheaper and it's about half and half. So we could potentially build a smaller plant, it's lower capex, and work the lower operating cost portion of the deposit, or you go after the super high grade and get your payback faster. So there's ways of managing, planning, scheduling that can also improve the economics, and those are things that we would look at.
Well, and so maybe, and obviously not going to hold you to any numbers here, but if you don't mind, and obviously feel free to defer the comment, but in terms of just circling back to CapEx, is there like a number, like percentage-wise, that you think you might be able to shave off that you're comfortable throwing out there?
Well, I know that would be probably not to, that's not to talk, formulate that. We think it'd be significant enough to make a difference.
Sure. Yeah, absolutely. And how much, and then like you say, coming at it from the other end, with your resource, I mean, how much prospectivity is left with that vanadium? Are you kind of starting to reach the ends of it, or is it still?
No, there's still open-ended. Yeah. And again, I can't talk about the percentage of increase yet because we're still seeing it there. Can't really talk about numbers until we get assays back and start putting it all together. But yeah, I think that there's definitely opportunity.
Well, I guess maybe a better question for you then is when might we expect a resource update?
Well, we're still maybe by the end of the year, maybe sooner. There's a number of things that we're considering, so I'd rather not tip my hat just yet. But we are moving towards putting all these pieces together towards advancing the project to a pre-feasibility. But obviously, we want to see the vanadium price to start coming up. So we're working on a number of angles, like increasing the tonnage, reducing the capex. You work at it from both ends, and then move forward to a pre-feasibility. And if grant money comes up, that would help speed up the process as well.
Just not to torture the point, but do you know off the top of your head how many meters or feet of drilling is not accounted for in your current resource?
Well, the number of holes that we're doing now is we're aiming at doing about 60 holes this year. Doesn't mean that we're at the end of that, but it's at that point it's pause time, get all the results back, model it up, see where it still can be pushed, and getting another campaign going. So there is it's an iterative stage, and you got to judge that when you got all your information that you can do, you can work off of. So it's the meterage is not very much because these are averaging about 270 meter holes, and we've got 60, so you can calculate that. I would say that in terms of our budgeting this year, we're probably putting half of our budget towards the deeper gold target at Carlin, about a quarter of our budget into the vanadium, and a quarter of our budget on smoke. So that's roughly the kind of split right now. And the reason why, well, we're optimistic and hopeful on all three. That doesn't mean, it's just like the deeper gold ones are more expensive and longer, it take longer to do. And the rewards can be enormous too. And that's why we're doing it too.
Yeah, absolutely. Game changing if that happens, right? Absolutely. Yeah. Just curious, do you mind what's your price per foot or price per meter for drilling down there? You're using an RC drill, correct?
Yeah, so it'll vary obviously because the shallow holes at Smoke are like $100 a meter. Whereas the deeper holes, because it's slower going and you end up, the rock is tougher to get through. It'd be more like maybe $400 a meter, even with RC. So it varies. And diamond drilling, we're not doing diamond drilling yet. Obviously, you want that. The RC is the more effective, cost-effective way of exploring and finding your ore grade intercept, and then from there, then you shift to diamond drilling, which is probably, well, in the case of the deeper Carlin one, you still probably end up doing half or more of a hole with RC because there's a lot of stratigraphy that just is not, you don't need to have core on. And then you shift to core drilling in the critical sections of the rock type and the deposits, I think. So you try to bring in the best tools you can at the best price. And there's compromises in each way of doing it. So it's a matter of, good decision making.
You just reminded me that I neglected to ask you about your share structure. You do have a very tight float. I think it's only 86 million commons outstanding at the moment. Does that sound correct?
Yeah.
And then not a lot of overhang. Do you mind just kind of filling me in on the warrants and their strike prices and their expiry dates?
Yeah, we've got about 22 million warrants out, and there's some that are at 26 cents and some that are at 75 cents. We also have options. There's about 5.4 million options with insiders. They're around the 25 to 50 cent range, the options. Our share structure is predominantly retail investors. We have a few little funds from Europe and Switzerland and Eastern Europe, but we found that every time we've gone to do a private placement that we've gone to try to get funds in, but funds are very slow in making decisions. And usually the retail investor, they see an opportunity, the story is strong. They make decisions in, very short time. And so our private placements get snapped up quickly. If funds, they take weeks and weeks, our private placement's filled by that time. So so that we're a retail based. We would like to move towards institutional investing. I think ultimately we will be, but and we've tried since 2018 to bring in more, but it's that excitement and interest and strong story that the retail investor just gets without a lot of due diligence that funds end up having to take, and they anyways, that's the way we've grown, and we've done really well. We've got really, really good shareholders. We've got a number of people who are positioning 2 to 6% of the company. Rob McEwen is a big newer shareholder. He put in $1.5 million in his last private placement in the spring of this year, and he put in $400,000 private placement before. Tukey Angus is a big shareholder. He's a well-known Vancouver-based successful businessman and entrepreneur. He's been involved in six, he calls them unicorns, but basically buyouts of projects that he's been involved with that have sold for billions. So I mean, he's a great M&A kind of a guy for
knows
us,
how to sniff it out
in our network.
Just curious, if you don't mind, just kind of pursuing this concept for a moment. I mean, is it a matter of institutions being a bit more conservative with their funding, and they're waiting for vanadium to kind of prove itself a little bit more, or does that strike you as a concept, or no?
Well, they're starting to get the picture. Certainly, I've got lots of calls into Europe in the last 6 months, and they're saying, "Oh yeah, this looks." I explained the sort of game-changing kind of situations there, and they get it. But it is an education, and that's one of the things that not only for retail investors, but funds as well. It's people aren't familiar with vanadium. It hasn't really popped up. It popped up in 2015, 2018 because of the price hikes, but then it just kind of disappears. And it's a smaller market than something like gold, so people don't, they don't understand it so much. There's a lot of there's the marketing of it, how it's used, and all that kind of stuff. It usually takes quite a bit of time to educate someone to get their comfort level with vanadium, and so we understand that's been part of our road here, our journey, is to get people to understand. This is a thing. This is something.
Yeah, it is the future, and the future is fast approaching. Never stops. Yeah.
Yeah.
Well, parting thoughts, final word to you, Paul?
Well, I just appreciate all the time that people have listened to this whole podcast. That's awesome. We're honest, hardworking guys that want to see value for our shareholders and doing our best for the shareholders. And so, and we've done it before in our projects big projects around the world for major companies. So I just want to thank everyone for their time and interest, and certainly just dive deeper into this project and into this company, and you'll see it's
worth your time. Well, no, thank you, Paul. Thank you for coming on the show. Thank you for being a gracious guest, and I look forward to the next time we chat.
Wonderful. Thank you very much, Matthew.
Thanks.